Wednesday, April 15th, 2026. The United States is blockading Iran. The Strait of Hormuz is barely open. Oil prices are 40% above where they were 6 weeks ago. Gas costs over $4 a gallon. The IMF is warning of a global recession. And the S&P 500 just hit an all-time record high. The S&P 500 closed at 7,022.95 points on Wednesday, surpassing its previous record set in January. The Nasdaq rose 1.59% to close at 24,016.02, its own all-time record. Both indexes have now erased every single loss accumulated since the war with Iran began, and then gone higher. Let that sink in. A war that has killed over 2,000 people, shut down the world's most important oil route, pushed gas prices to their highest in years, triggered the blockade of an entire nation's ports, and the stock market responded by reaching its highest point in history. The rebound happened faster than any market recovery in recent memory. In just 10 trading sessions, the S&P 500 rose 9.8%. Deutsche Bank called it faster than the post-COVID bounce of 2020, faster than the recovery after last year's tariff shock, the fastest 10-session run in years. So, what is Wall Street seeing that the rest of the world is missing? The answer is simple and terrifying in its own way. Investors are betting the war is almost over. Trump said it himself on Fox Business Tuesday night. I think it's close to over. A second round of talks between the US and Iran could happen as early as this week. Regional officials told the Associated Press there is now an in-principle agreement to extend the ceasefire. Think of it like this. The stock market is not reacting to the war. It is betting on the ending. And right now, it is betting the ending comes soon. But here is the contradiction that Wall Street is quietly ignoring. Gas prices are still above $4 a gallon. Oil is still at $95 per barrel, nearly 50% above its pre-war level of $67. Iran's petrochemical company just suspended all exports. The IMF raised its inflation forecast for 2026 to 4.4%. And the blockade of Iranian ports was described by U.S. Central Command as fully implemented just yesterday. J.P. Morgan CEO Jamie Dimon reported a 13% rise in profits this week, but called the economy an increasingly complex set of risks. Wall Street's own fear index, the VIX, has fallen on 10 of the past 12 trading sessions. But analysts at ING warned plainly, markets are increasingly preempting a positive outcome. We still think caution is warranted. The market is celebrating a peace deal that has not been signed, a ceasefire that expires in 5 days, a second round of talks that has not been confirmed, and an oil price that is still double digits above normal. Your 401k is recovering. Your retirement account is higher than it was in January, but your gas tank still costs $4 a gallon to fill. Your grocery bill is still inflated, and the war that caused all of it is still happening right now, today. The stock market sees the finish line. The rest of the world is still running the race. Whether Wall Street is right or dangerously wrong will be answered in the next 5 days.